Hello and welcome to Dale's Life. This is the second part of my look at blockchain, Bitcoin and cryptocurrency. In this particular episode, we'll be looking at specifically Bitcoin. So the history of Bitcoin, part of this was covered in the previous video, but in 2008 a white paper was created by a group that was authored by a named Satoshi Nakamoto for Bitcoin, a peer-to-peer electronic cash system. So this was the first documented use of a blockchain system, and in this case it was as an electronic cash system. So the very first block of Bitcoin was created on the 3rd of January 2009, where the first block 0 was created, and that was the launch and start of Bitcoin. Why Bitcoin? Well, Bitcoin as a currency or other use was designed to be decentralized. By decentralization, it means that we're not relying on any one point of control or failure. So there's not one central server, no one central company, government, or anything else which has a centralization. This can be across the internet, any country, anywhere. They're even looking at putting nodes, which we'll get into later, about in space. So it is truly decentralized and not controllable. The blockchain that it is based upon is immutable. That means once a transaction has been made, you cannot change it. You can't go back and change history. You can't reverse a transaction which has immutably been created in the blockchain. So that is stops people basically cooking the books. In a normal system, people can go in and change things. If it is a centralized system, they can go in and manipulate and change the values, and there's no inbuilt security against that. No central authority. There is no one country, government, or institution which is responsible for Bitcoin and defines any of its parameters. It was all created initially in its initial code as to all of how it will work and how it is decentralized. Yes, the code can be changed, but that again is decentralized and not centrally controlled, and we'll talk about that in transparent code. But the coders cannot just unilaterally make a change. The change has to then be verified and agreed by all of the nodes within the Bitcoin environment. If the nodes do not all agree, the change will not go through, and that was built into the original program and system of the blockchain. This is very important to a lot of people because it gets away from some particular government or person unilaterally making a decision that affects the whole of your currency, whether it be a trade tariff, a embargo, or just political ineptitude can make a big change in value in a normal currency stock, etc. Limited supply. The Bitcoin from block 1 to its was given a certain number of Bitcoin. Every time a block is mined, it generates some more Bitcoin, which is given to the miners and comes back into the environment. And the amount of Bitcoin which is given gradually reduces. So over time, it will get a smaller and smaller amount. It is envisioned that the maximum ever supply of Bitcoin would be 21 million Bitcoin. And without massive coding changes, there would not be any way that can be increased. The last Bitcoin would theoretically be mined, or it would never ever finish, but the last single Bitcoin would be mined in something like 2140. So we've got a long time before we see the final Bitcoin. At this time, we are at something like 80% of the Bitcoin that will ever exist is now existing. So it's now a slow decrease in available Bitcoins each block. How is this different? Normal currency is subject to central authority, and as a central authority they can decide to do, sometimes the term is quantitative easing. Basically, they print money. There is no limit to the amount of money that they can create. And every time they create money, it effectively devalues that currency. Although the value on an individual unit appears to be higher, the actual overall value is decreased. An example of that is that you take the British pound as an example, when it is one of the most long-standing currencies in the world, that's continued in its same form. When it was originally created, the value of a pound was based upon a pound of silver. Because of the number of pounds that have been created over the time, if you look at that original value to where it is now, the pound has gradually decreased in its real value. So it's now actually worth about 99, it's devalued by 99.8%. So it's worth less than 0.02% of its original value. Fast cross-border transactions. Because the Bitcoin is on the internet, it has no geographical limitations or borders. It is also not under any governmental direct control, so it has no governmental influence as to how the Bitcoin is moved. This means that moving a Bitcoin between two people is only limited by the code and the network, not any external factor. Simple transaction fee. The transaction fee within Bitcoin is per transaction and not the value of the transaction. If you are sending a very small amount of Bitcoin or multiple Bitcoin, the transaction fee scale is exactly the same. The fee itself is only based on two factors: the speed at which you wish to transfer and how busy the network is. First of all, if the network gets busy, i.e. there is a lot of transactions waiting to be processed, which did happen at times in late 2017, the fee does go up because there is more work to be done and it's backing up on the transactions. The other factor is how fast you want it to go, and there is a scale of fees to say if you want it to happen very quickly on the next block, there is one scale of fee. If it's to happen within the next 3 blocks, then the fee is about 70% of the first fee. And then finally you've got happening within the next 6 blocks, which is generally only a half of the original fee. And fees wise, we're looking at the moment to get an instantaneous fee, the price is in the region of about 10 cents in dollars, 10 to 12 cents at this moment to do a transaction immediately, going down to about 5 cents if you're willing to take time. That is significantly less than a lot of transactions in normal systems where you could be paying pounds, or in some cases hundreds of pounds, to make a transaction between 2 accounts in different countries. And then it can also take days, whereas the Bitcoin can happen within as little as 10 minutes. Transparent transactions and code. One of the things of Bitcoin is all of its code that makes up Bitcoin is available to the public to look. Now, most people would not know what is to be looked at and to understand it, but this means that all of the code changes, and everything else to do with Bitcoin can be examined and verified and ensured that it is secure and reliable by an almost infinite number of people. Anyone can look at it and potentially find an issue and raise that as an issue to the coding team. The transactions in the blockchain are not encrypted or in any way obfuscated, in that every transaction in history is viewable. This means that you can always see what Bitcoin was transferred between two accounts. How does Bitcoin work? Okay, so basically, every user has a unique account address. And a user can have multiple addresses. So we'll do that one first. Now, an account address is either depending on the format, is a 26 or 35 character string of letters and numbers. There is two formats that people are using, but both are valid in the system. This number of strings means that you can have a humongous amount of potential addresses, and we're never going to run out of addresses for the world to use. This means that every user can have multiple addresses, so you can actually create an address just for a transaction. So have one address for sending or receiving money from one person, and another address for another, so that you can easily self-monitor your address usage. This unique address also means that it's not located down to a particular user. The address is just a number. So a user creates, using their address that has a Bitcoin associated with it, it creates a transaction to another Bitcoin address to basically say, send X amount of Bitcoin from address A to address B. That is then sent using a wallet software to a node. A node validates the transaction just to say, does the account have the Bitcoin and is it in a valid format, what they are asking to do? And that's all it does. That validation is then passed to the miners. The miners do the confirmation. Confirmations are where all of the transactions are pulled together in one block, and the miners confirm that the sending account has the Bitcoin, that it's not that Bitcoin and that address is not trying to spend that Bitcoin twice or multiple times, and then it also modifies and the receiving address to say you now have that amount of Bitcoin. All of these transactions are pulled together in a block every 10 minutes. And that is what is known as a confirmation. Once the block at the end of 10 minutes is closed and all of those transactions are confirmed, it is known as a confirmation. At that point, the Bitcoin is in the recipient's balance as a zero confirmation, i.e. it's only had the initial block to say, I have been confirmed. In most systems, to ensure that someone doesn't try to spend the Bitcoin a second time, you wait for multiple confirmations, usually 6 confirmations, which means 1 hour, to ensure that the sender is not trying to reverse or spend the Bitcoin more than once. Some common Bitcoin myths talk about. Bitcoin has no value. This is a misnomer because normal currency has no value. Normal world currencies are not based upon any real world value, nor are stocks in a company. There is no inherent value of owning a stock. It is just the belief that someone will honor this value when you transfer it. It's the same with Bitcoin. Bitcoin's value is based upon all of the money which is invested in Bitcoin and all of the users of Bitcoin honoring the fact that they do not want to lose all their money. At the moment, I believe it is somewhere around $200 billion is invested in Bitcoin. All of these investors cumulatively have set the value of Bitcoin. If someone wants to buy Bitcoin, you have to find someone who is willing to sell their Bitcoin. And they will sell it at a higher value than they bought it, generally. And vice versa. If you want to sell, you just need to find someone who is willing to buy your Bitcoin. And that is the value. It is a pure barter system, for want of a better word, and a trading system within the Bitcoin. It doesn't need to be pegged to gold, silver, or any other value. Stocks in a company. Most stock companies, let's say, even take someone big like Apple. Apple does not have however many billion dollars worth of physical assets to cover their stock value. Their stock value is purely inherently based upon their potential ability to honor that amount of money. If they, in intellectual property and just sales in the future, there's nothing to say it couldn't close down next day and everyone's stocks are worth zero. A currency in a country is only based upon the government saying that they will honor that amount of currency when traded, but the value of a currency does go up and down. This comes into the next section. Bitcoin is volatile. Yes, the value of Bitcoin goes up and down. It goes up and down quite a lot at the moment because the value of 200 billion is a large amount, but in currency terms, it's not a huge amount. So there is wild swings of volatility. Currency also goes up and down, can be less. In occasions, you get hyperinflation or some political move can devalue a currency extremely quickly. Recently, Venezuela, Argentina, there's been some European, Greece, and other European countries that have had extensive fluctuations in their currency value based upon political decisions or what's happening in their country. Situations which are not under the control of the populace at all. And so they have seen all their investments and money just disappear. Bitcoin is anonymous. Bitcoin is pseudo-anonymous. Bitcoin itself is based upon an address. The address is not tied to an individual, but it is not totally anonymous, i.e. every transaction within that address is publicly viewable. It is only anonymous in that, or pseudo-anonymous in that account number, that Bitcoin address, is not tied to an individual. But if you wish to then transfer that money into fiat currency, normally most exchanges require KYC, which is Know Your Customer, in which case you are then tying down your address to an individual. And that is usually a legal requirement in most countries. So in that case, it then becomes not anonymous. Bitcoin is mainly used for illegal activity. There has been a number of surveys in the past and frequently which has shown varying values of illegal activity within Bitcoin. One of the most recent in-depth studies shows that the illegal activity with Bitcoin is as low as 0.2%. That means that less than 0.2% of the transactions of Bitcoin were for illegal activities. Currency like the US dollar, it has been stated on some reports that up to 10% of the movement and transactions of US dollar across the world is for illegal transactions. And cash, as such, is more widely used for illegal activity than Bitcoin. Because Bitcoin is not truly anonymous, and it can always be traced, Bitcoin cash is more anonymous, i.e. once you have got cash and transferred it to another person, there is no record, there is no trace of that money ever being transacted and given across. There has been certain intelligence agencies have actually specifically said they wished more illegal activity was done on Bitcoin because it is easier to trace and track the activity than it is cash or fiat currency. Bitcoin is illegal. Bitcoin itself is not illegal. It is a digital transaction. There is certain elements of Bitcoin which certain countries have made illegal, and it usually revolves around tax and tax evasion. What is meant by this is if you make a profit in Bitcoin, you need to divulge this in your tax returns. If you are selling a real-world product or service within using Bitcoin, you often have to charge, this is dependent on different countries, a tax based upon that governmental tax rate. So most Bitcoin is not in itself illegal. It is if you do not properly transact the Bitcoin for real world or fiat services without the appropriate governmental tax. In other words, the government wish to have their little cut of everything that happens, and they want to ensure that you're not basically bypassing their tax laws. Bitcoin is dead and it is disappeared and it's of no use. Bitcoin has been declared dead hundreds of times since its creation in 2009. There is a little website with a counter which shows how many times it has been declared dead by the media or popular celebrities as no use and get out, etc. And every time it has come back up into the mainstream. Because there is so much utility in cryptocurrencies and value has been given to Bitcoin by investment, the chance of it disappearing is so minimal that it is not actually a valid concern for people now. It is only the value of the Bitcoin which is in question, not whether it will disappear. Also, it is now virtually impossible to disrupt Bitcoin. The mining and node system is so large in the world with so many miners, so many users of Bitcoin, it is virtually impossible to totally disrupt Bitcoin. There is no one central place that can be disrupted to destroy the Bitcoin network. This was built into the original code to ensure this decentralization, to ensure that there was no one central point of failure. And to do a failure now, to do what is sometimes called a 51% attack, to do that you would have to control so many nodes and servers that, again, it would be impossible even for a large government to control that amount of computing power and systems to destroy Bitcoin. And the code itself would still exist in the old systems, you would still not destroy Bitcoin. You would just do what's called a soft fork and cause Bitcoin to split into two versions. So generally, Bitcoin itself is not dead, and you cannot kill off Bitcoin. Some real world uses of Bitcoin. Bitcoin itself, one of its biggest values at the moment is as a store of value, similar to the use of gold and silver, to store your normal fiat currency in a system which is not affected by governments or the country you're in. There's a number of countries in the world. I originally said about hyperinflation in Venezuela and Argentina, Zimbabwe, Greece, and a few others, where there's a lot of people are seeing their own fiat currency so devalue quicker than Bitcoin or cryptocurrencies that they have moved their normal fiat currency into Bitcoin. And if their country should recover, they can move their Bitcoin back into their fiat currency and ensure that their savings have been held. Another quick use of Bitcoin is to transfer currency between two people with very low fees, especially cross-border or between countries. Once you have bought your Bitcoin in, say, GB pounds, you can transfer it from an exchange in the UK to an exchange, say, in Thailand for a very small fee, and this could be, the transaction value could be anything from pounds to thousands or hundreds of thousands of pounds. And within an hour, the user in Thailand would then be able to move that money from their exchange account into Thai baht to their bank in Thailand. So very quickly you can transfer money from one country to another, and that fee could be as little as 12 cents to move that value, and it's done within an hour. Done in a normal fiat currencies, this can take, depending on the systems, up to £20-30 for the transaction. Sometimes there is a percentage fee at both sides, and it can take days to transfer. Trading on exchanges. Because of the volatility of Bitcoin, there is a number of exchanges all over the world where people can trade. The idea is you buy low, sell high, try to predict what's going to happen to Bitcoin, and there's a lot of professional people who are making very good money trading Bitcoin and other cryptocurrencies every day. There is also a warning here, there is also a lot of people who are losing money on trading cryptocurrencies. If you're not a professional trader, the Bitcoin environment or the cryptocurrency environment is very volatile and subject to some manipulation, and it is not easy to make money on Bitcoin trading, but it is possible. A country-independent value is of great advantage to some countries, as we said before, as a store of value, but also at some point people are now saying, what is the value in Bitcoin? Because that value of a Bitcoin is averaged across all currencies in the world. So a Bitcoin value will never change as such, in that one Bitcoin is worth a value, and that worth is the same in dollars. So $6,000 is going to be the equivalent to £5,000. Now, the value of that currency, or the fiat currency, is not based upon political forex divergence or inflation rates. It is purely based upon the currency rates and exchange rates in that country. So you can specify a Bitcoin value and know that's always going to be worth a certain value in your country, and people can easily convert to every other country, and it's less volatile than talking about purely, say, GBP to USD conversion currency rates. It's a little bit more advanced on that, but people are finding that they can post a value in Bitcoin or cryptocurrency, and it is more stable in conversion. What is the near future for Bitcoin? Currently, the transaction rates we talked about is about an hour, 10 minutes to an hour, but there is new third-party additions to Bitcoin, such as the Lightning Network, as well as crypto debit cards, which allow you to transfer your Bitcoin or spend your Bitcoin in seconds. So the transactions are held on a system for smaller values so that they can be used in a daily usage. You will be able to walk up and buy a coffee using your crypto address on the Lightning Network, or some crypto debit card which stores your currency and then you spend it from that card. The crypto debit card would be more centralized because it'd be based upon that card system, similar to Visa, Barclaycard, and those other type of debit card systems. But it would deal in small amounts and give you the Lightning Network gives you as the name suggests, a very lightning, very quick payment system. Paying utility and other regular amenities. In the near future, it's seen that already some companies have been doing this. They have been posting their bills with a Bitcoin address, so you could actually pay your bill using Bitcoin rather than fiat currencies. Secure internet payment. Because Bitcoin is a give system, i.e. you actually send from your address to another address an amount, rather than credit cards and other banks' debit systems, which you give them your details and they take money from your account. That is subject to certain fraud and security elements, in that you are assuming that person will not abuse the information you have been given, and the internet page, etc., you are on is in not some way taking more money than you have said, or any other type of transaction. And it's been known where people have given over credit card details and then suddenly extra transactions come out of their bank for no reason. With a Bitcoin system, they give you an address and you give that address the money. So you are giving. They cannot take any more money than you send them. It is a one-way process. It does mean that they will hold until they receive the money, but with the Lightning Network, that can be done in seconds. What Bitcoin is not intended, or I don't see as the real use case. Bitcoin is not cash. There will be never a physical Bitcoin that you give someone. Cash itself has no actual real value. It is just a note. It is just a physical way of making a digital transaction. Some people, I believe, have created a symbol of Bitcoin with a Bitcoin address which has that amount of Bitcoin on that address. But it won't be, that's more of almost like a Bitcoin crypto debit card, rather than really being a physical entity that you can transact between two people, more of a gimmick. Cash is untraceable, it's forgeable, it can be manipulated or damaged. Bitcoin is digital. It can't be duplicated, you can't forge it, you cannot destroy it. It is forever, and you transact it only digitally. Private transactions are generally not seen as going to be happening in Bitcoin, i.e. your transactions will always be part of the blockchain, and they are unlikely to ever be totally privatized so that you cannot see that an amount was sent from transaction A to transaction B. There was a lot of talk of cryptocurrency and Bitcoin being everything must be Bitcoin, everything must be blockchain. As I said in my blockchain video, there is use cases for blockchain and there is use cases for existing systems. Bitcoin is not the answer to everything. As I said, cash, there would still be a system for cash potentially. There is still potentially, a good thing is, illegal activity would need some other method than Bitcoin because Bitcoin is traceable. So it's good in that regard. It's not as easy to do illegal activities. There will be many other use cases, such as creating contracts that only pay a person based upon certain conditions being made, scheduled payments. All of these type of elements need a more advanced ecosystem, and that is where we come into altcoins, which are providing some of these extra answers. My next video will be on the alternative cryptocurrencies or altcoins. So these provide some of the answers, or where there is a deficiency in Bitcoin or a totally different utility to Bitcoin itself. Hopefully you have found this video helpful. Please leave any comments below. Please hit the thumbs up button or leave information as to what you think I may have got wrong so that other people can see that and we can discuss why I have the view I have, and I can always alter things if you have a good enough discussion about it. Thank you for now, and hopefully look out for the next video.